Hey, what's up, my friend? So, welcome back, and in this video, I'll be discussing about breakouts. So, what is a breakout, right? So, generally, how I trade breakout, okay, is always with a build up. So, for example, if I want to look for a long setup, okay, it has to form a build up at the highs, right? This is a build up before I enter the trade. And similarly, if I'm looking to short, then the market must form a build up at the lows here before I take a short trade. Now, why do I do this, right? The reason is simple, right? First and foremost, your stop loss will be tighter when you have a build up because you can just reference it from this lows, right, and have a tighter stop loss compared to someone who put it just below at the low of this range. Second reason is that when there is a build up, it is a sign of strength because it's telling you that the buyers are willing to buy at these higher levels and the sellers are unable to push price lower. So this is a sign of strength. Okay, how I don't trade breakout is this, right? I'm referring this from a discretionary point of view. If the market, has a clean move and then just break up, okay, I don't take this type of breakout trades. I would prefer to have a build up that is formed before taking the trades. Okay, don't get this mistaken with systematic trend following. That is a different thing altogether. I'm talking about discretionary trades, right, and taking a discretionary breakout, which is what I'm sharing in this lesson over here. So with that said, let's talk about a few things on what I look for in trading breakout. Number one, the market has to be first in a range, all right, contained between obvious support resistance level. Number two, the build up, all right, has to have little to no room for the price to swing and is formed at the high of the low of the range. So what do I mean by this is that, let's say the build up is at this highs over here, right? This is a very tight build up because you can see that the price don't really have much room to swing. Okay, but if let's say in this case the market comes back but it has been swinging like this over here is not a build up, right? This is not a build up because you can see that the market has obviously swinging between this swing high and swing lows. So this is what I mean by little to no room for the price to swing. You need to be very tight, like a spring, like a coil being compressed, right? The tighter it is, the better the breakout tends to happen. And you can enter the trade when the price breaks out of the range. So let me walk you through a few examples. Okay, so this one over here, you can see that the market approaching this previous resistance over here, and notice that this build up is being formed. Okay, so you can see that one thing that I noticed is that when the market is forming a build up nicely, you can put in something like the 20 period moving average, and you notice that the price would tend to respect it, and the 20 period moving average would float up together with the price. Okay, so after which in this instance you can simply place a buy stop order above this high and get on board this breakout trade if it happens. Another example over here, this is a euro dollar. Okay, the market is in a range, right, between within this area. Okay, so this one is a little bit special because it's already seems to depending on how you define breakout, this market could already break up, or it could be just at the edge of a breakout. So nonetheless, the important thing to look at is the build up that is formed over here, right? Notice the compression, right? All the candles, right? This bunch over here are basically being contained within this range of this bar over here. So all the subsequent candles over here are being contained within this first the green bar over here. So it's telling you that the compression is tight. Okay, and you want to be trading the breakout, if the setup occurs. Okay, I want to share with you more examples. This is a chart of sugar. Again, this is nothing on hindsight. This is all trades that could potentially happen. So you can see that this market sugar is within this range. Okay, this highs, this lows. And you see that there is a potential build up that is being formed right here. Okay, so if I pull up the 20 period moving average, you can see that it's starting to support the price. Okay, so this is a somewhat of a tip that you can use, right, to see how the market respects the 20 period moving average. Usually the best build up that I find, right, is that the price is above it or below it, depending on your trade direction. If you're looking to long, right, the price would be above the 20 period moving average, right, and the 20 period moving average is pointing up nicely, right, showing you that there could be a potential breakout on the cuts over here. So this is a potential build up that is forming at the highs. Another one over here is a dollar Mexican. You can see this one. In fact, it's an inverse head and shoulders pattern as well. Remember, we discussed about chart pattern. I said that I don't trade chart patterns. I trade the concept behind it. So in this case, what's the concept, right? You have a potential range between these highs and these lows. And this is the build up that is forming, right? You can see that this tight congestion that occurs over here. Notice the 20 period moving average, right, is supporting the price as well nicely. But in this case, right, the trade clearly failed, as you know, if you place a buy stop order above this high, you would have gotten triggered and the market reverse in the opposite direction, right? But nonetheless, this is a valid setup, right? And I want you to pay attention on how the build up form within this range. Okay, so just a quick recap, right? When I trade breakout, right, there are a few things I look at, right? Firstly, the market has to be in a range, right? If the market is not in a range, then there is no breakout. The build up will have little to no room for the price to swing, right? And you can use the 20 period moving average as a guideline to see how the build up is forming, right? And if the price breaks out of the build up or the range, right, you can take the trade. Okay, so with that said, right, this is how I go about trading breakout, and in the next video I'll share with you some advanced tips on how to go about trading breakouts. So with that, right, I will see you in the next video.